Saregama stock has surged 300% this year, and this is an anomaly for the stock that has remained largely range-bound over the past decade. So what has really caused the big re-rating? Why is the analyst community suddenly taking notice of this company? Saloni Dhanuka is standing by with the analysis. Saloni, first tell us what a retail investor is essentially buying into if he or she is investing in Saregama today.
So, Pradeep, basically it is a pure play music and content producing company owned by Mr. Sanjeev Goenka. Now, it has a market cap of around 1500 crore rupees, which is again the lowest market cap among all the Sanjeev Goenka companies, listed companies. Now, the key USP of the company is that it owns 1 lakh music rights for 1,20,000 songs and over 3,000 hours of Tamil series programming. Now, in terms of segmental revenue, most of the business comes from the music business for Saregama, and it contributes to about 87% of the revenues. Now it includes their B2B business as well as B2C business. So B2B business is their OTT as well as YouTube segment. Now B2C is their new product launch, which I'll talk about later, and rest 13% of the revenues is contributed by the TV software business. Now, in terms of price performance, if you see, the stock has given almost 310% return on a year-to-date basis, while it has generated over 340% in last 1 year. Now, coming to the financials here, coming to the return ratios, both return on equity and return on capital doesn't look that appealing for Saregama, but what stands out is their analyst estimations for FY20 on these ratios. Now, analyst expects return on equity to grow around 16%, while return on capital to grow about 25% by FY20. Now, why? Because they expect higher margins for the company going ahead on the back of strong free cash flow generation, along with a very good working capital cycle, which will aid these ratios. Now, in terms of valuations, the stock looks a little expensive. On FY18, the stock trades around 58 times, while for FY19, it trades around 39 times, and for FY20, it trades around 26 times. So, as far as valuations are concerned, it is quite expensive. Now, what stands out for the company is, and what we should make a note of is, on the balance sheet, it is a debt-free company, and it has managed to cut down its debt substantially from being a heavy debt company to a no debt company now. Also, it has a cash balance of over 1900 crore rupees on its book, while the company also owns 12 lakh shares of CESE, and it also has land assets worth rupees 180 crore. Now, in terms of financials, let's look at the revenues now. It has actually drastically increased from FY15 to FY17, and look at the first half revenue figure. The company has almost managed to earn 150 crores, which is again 3/4 of what they have made in FY17. Of terms of profit, the profit have declined from FY15 to FY17, but again in the first half of this financial year, they have managed to bring in 8 crore rupees on their bottom line. And talking about their margins, in line with profits, it has also declined, but mind you, again for the first half, they have garnered a margin of 9.4% as compared to 4.2% for FY17.
So that looks interesting. In fact, it would be interesting to tell our viewers also how some of the other Sanjeev Goenka group companies have done year to date, and we'll talk about it. But I have one more question in mind, Saloni, before that. What has really changed recently? Why this sudden outperformance?
So what changed for the company, Pradeep, is the company actually started focusing on their B2C segment, which is their new product launch, which is a retro-looking audio player, which is called as Carva. Now, the company launched this product in May 2017, and they claim to sell 95,000 of such units in Q2 since the launch in May, and they sell this product through 4,600 crore retail outlets, which includes tie-up with Vijay Sales, Chroma, as well as they have partnered with e-commerce players like Amazon, Flipkart for that matter. Now, Anand Rathi expects that the company can sell over 14 lakh of such units in the next 2 years, while Kotak Securities believes that the company will be able to sell 20 lakh units in the next 3 years, which is quite a big number for Saregama. Now, coming to what's next next for Saregama, all said and done, what is the company planning ahead? The company have already started acquiring more music rights to strengthen their music library, while growth in the OTT segment, that is over-the-top services with growing broadband data speed is actually helping the company. Now, the company plans to launch Carva in regional languages like Tamil, Bengali, and the company also plans to expand globally with setting up this product base in UK. Now, what this brokerages say is Anand Rathi has actually initiated a coverage on this stock with a target price of rupees 1200, and they see margin moving from 5% in the current year to 20% in FY20. While talking about Kotak Securities, they have also initiated a buy coverage on this stock with a target price of rupees 1264 rupees. Now, they believe that strong cash flows along with strong balance sheet numbers will actually prove to be supportive for this company. And mind you, if you look at Saregama versus Carva as a product, though margins for Saregama is around 5% for FY17, but margins for Carva product is over 16%. So this is something which is actually making money for Saregama, Pradeep.